Hi, and welcome to the January 2017 Downtown Pittsburgh IBD Meetup presentation. My name is Eric Rossi. I'm a co-organizer for this meetup group. And if you happen to find this video on YouTube and you're interested in learning more about the meetup group or joining, you can go to the link shown there on the first page. And I'll talk about some of the reasons you might want to join towards the end of the video. So the mission of this group is to educate individual investors about the CAN-SLIM investing strategy. So that means identifying the best educational material, whether it be books and articles or webinars, videos, etc. And this presentation is for educational purposes only. I'm not recommending any securities to buy or sell. Investing in stocks does carry substantial risk and you can lose your capital. I'm a non-professional volunteer investor. Investors Business Daily, IBD, and CAN-SLIM are registered trademarks of Investors Business Daily, Inc. MarketSmith is a registered trademark of MarketSmith, Inc. And Meetup is a registered trademark of Meetup, Inc. And the prerequisite for this presentation, this assumes that you're familiar with the CAN-SLIM investing strategy that was developed by Investors Business Daily. So at a minimum, I recommend the viewers should have read How to Make Money in Stocks by William J. O'Neill, which is shown here. This is the latest edition shown here, the green version, before you view this video. Now, if you haven't, you're certainly welcome to listen to the rest of it, and you'll certainly learn something, but it'll make more sense if you've at least read this book. And really, I recommend reading this book many, many times. So the topics for this month, we'll go through the market dashboard as always. We'll continue on our CAN-SLIM series. Last month we did the S, and this month we'll do the L in CAN-SLIM. Then we'll look at current watch list stocks. We'll do a market analysis. We'll look at current holdings, and then talk about some recent trades if we have time, and then we'll conclude. So the market dashboard, the market's in a confirmed uptrend right now, according to IBD's Market Pulse. So that's good. So that gets a green. The uptrend health, you can see this uptrend's been going on for an incredibly long period of time, almost 200 days now, where IBD hasn't put the market in correction. And I've never seen this happen before in the time that I've been following IBD. So this is a kind of an unusual time. And for a long time leading into the election, the market was going sideways. So there wasn't much of a reason. There really was no reason to put it into a correction. It just kept going along in an uptrend. Now the market's been very strong since the Trump election. So this, I'm still keeping this at yellow, even though really I probably could have reset this after the Trump election and said that we were starting a new uptrend. But if I go technically by IBD, the market pulse, I'm going to keep this here and say that we're still in a very long uptrend. This uptrend's been going on for a very long time. Distribution days, which are days where the general market indices are showing distribution or negative price action. Right now we've got 3 for the S&P 500 and 5 for the NASDAQ. So I'm going to give that a yellow. Those are medium counts historically. The Federal Reserve activity, the Fed raised interest rates by 25 more basis points in December of 2016, and they said that 3 more rate hikes are possible in 2017. So I gave this a red because historically when interest rates start going up, it spells trouble for the stock market and growth stocks. But one thing to keep in mind is that we do have a really positive catalyst with Donald Trump being elected. The market's responded very positively thus far. So that seems to be negating the rising interest rates, at least for the time being. IBD each week in their paper, they have charts. It's called What's the Market Trend, and they show the S&P 500, the NASDAQ, and the Dow Jones Industrial Average. So this information is from the weekly paper. You can also get this every day on the IBD Market Pulse from the website investors.com. So right now the S&P 500 is up for the year, up quite a bit for being 1 month into the year, and the accumulation distribution rating is a B+. So that's good. That gets a green. The NASDAQ, there's a typo there. The NASDAQ is above the 50-day moving average. Year to date, it's up significantly in 1 month. It's hard to imagine that that performance is going to continue through the rest of the year. And it would be worth actually going back to see if this is if January was probably one of the stronger months that we've had in recent years for the NASDAQ. So obviously, if this keeps going on, the NASDAQ would be up like 70% this year. Again, that's hard to imagine that's going to happen, but you never know. And the IBD 50, which is a composite of the top 50 growth stocks by Investors Business Daily, this indice is in strong ground as well. It's actually near a new all-time high. It's up for the year. You can see that it's outperforming the S&P 500, but it's underperforming the NASDAQ. Ideally, you want to see growth stocks outperforming the general market averages. But this still gets, all three of these get a green right now. So the market right now is very strong, and it just keeps on trucking higher for the time being. These parts of the market dashboard have been unchanged for a long time. We're currently in a bull market, which started in March 2009. We haven't had a major bear market since then. So historically, this is a very long-running bull market. But who knows, with Trump being elected and the market seeming to respond very positively to that, we could keep going. This bull market could keep going for who knows how long. The last bear market we had ended in February 2009. Again, historically, we're overdue for a bear market here in terms of if you look at historically how often bear markets happen, but that doesn't mean it's going to happen anytime soon. It's just something to be aware of. And intermediate corrections, which are corrections in the 10%, 15% range for the NASDAQ, we've had 9 in the current bull market, which is again a high count, but like I just said, the fact that we've been in this bull market so long and now the market is really moving higher after the election could negate a lot of this historical precedence. Next topic is we're going to talk about the L in CAN-SLIM. So each month we've been going through one of the letters of CAN-SLIM. CAN-SLIM is an acronym developed by William J. O'Neill to describe his methodology of investing in growth stocks. And the L stands for leader laggard. So we're going to look at that in detail this month. And this material comes from Chapter 7 of How to Make Money in Stocks, which was the green book I showed at the beginning of the presentation. And we got a little analogy here with the tortoise and the hare. The tortoise is the leader in this case, and the hare is the laggard. So why do we care about finding leader or laggard stocks? Well, ideally you want to buy the top-rated stocks in the top-rated industry groups to get the best odds of a significant price increase. They say that the general market affects the lion's share of a stock's move. So if the general market's moving up, stocks are going to tend to get pulled up in likewise. The industry group can account for, I've heard different numbers, 15 to 30%, but the industry group strength can also have a significant effect on a stock's performance. So what is meant by a top-rated stock? Well, that means, it doesn't mean the biggest company, it doesn't mean the best known company. It really means the company, the stock with the best earnings growth on a quarterly and annual basis, the stock with the best sales growth, the best return on equity and margins, the best technical action on the chart, and the one with a new and innovative product or service that differentiates. All those things will differentiate the average stock or the laggards in the group versus the strongest. In Bill O'Neill's book, he talks about sympathy plays and that you want to avoid these. A sympathy play is basically a laggard stock in a strong industry group. So if internet content stocks are performing really well and you see a stock in that group that's really underperforming, it's better to go for the one with the best characteristics than to go for one that has been underperforming with the thought of, oh, well, this one's just lagging a little bit, but the group is going to pull it up and it's going to move up significantly. you're better off. That's not the best strategy. History tells us that you're better off going for the stock that has the best can slim characteristics in that group. That gives you the highest chance of having the best return. Now, it doesn't always mean that the stock with the best earnings and sales growth is going to perform the best, but historically, that's going to give you the best odds of that. So IBD divides stocks into 33 different sectors, and then these sectors are further divided into 197 industry groups. So I'm going to switch over to an EIBD weekly newspaper, and I'm going to show you what I mean by this. EIBD also helps you identify the top stocks in each sector, so I'll show that. And then if you want to find the top stocks for each industry group, I don't believe you can find that in the paper, but you can find it through the IBD stock checkup. So let's go take a look at an EIBD right now. So this was the most recent paper, February 6th, and this isn't going to be in the same place necessarily every paper, but right underneath at the bottom of the IBD 50, we've got this section called Find Your Group's Sector. So here you can see all the 33 sectors that IBD divides all stocks up into. So we've got agriculture, we got banks, we got computer, we got finance, medical, etc. And then within each of those sectors, we have industry groups. And there's 197 of these industry groups. And the reason that they did this is because it gives a better granularity of being able to target the best moving stocks and the stocks that are likely to move the most. The sectors are too broad, and there's so many subcategories within those sectors that they went further and went into these 197 industry groups. So it's useful to know which sectors are performing well. Like banks have been performing really well since Trump was elected, but it's better to know then drill down and see, well, which industry group's performing the best, and then you can go dig and look in that industry group and see which stocks have the best characteristics, and that's going to tend to be your best merchandise to buy. So let's scroll down a little bit here. If we go to the IBD Smart Tables, here you get all kinds of information. You get the IBD composite rating, the EPS rating, the relative strength, relative price strength rating, etc. And here, this only identifies the sectors, the 1 through 33 sectors. It doesn't identify by industry group. But what you can do here, you can see banks are number 1, meaning banks are outperforming all the other 33 sectors right now. And then within here, you can see we have anything that's boxed up here, or anything that generally has a lot of bold print and has certainly you could just start looking at the composite rating is a good place to start. Generally the higher the better. So if you want to find the very best though, like right now IBD is saying, hey, Western Alliance, tickers WAL, is the top stock in the banks sector. So you could then go look at this one and say, okay, well, which industry group is this in out of the bank sector? And then look and see if there's any other stocks that are similarly performing to WAL, and then you could choose one of those to put on your watch list if they're in a technical buying area. So if we scroll down further, like in the chip the chip sector, you can see they're identifying Avago and Infi as the 2 leaders in that group. So, and underneath there, you get a couple more names like Cavium and Max Linear before you go into the main listing here of the other stocks. So if you really want to narrow this down, you could just focus on these guys right here that are boxed. If you want to dig a little further, you could go to these ones that are shown right here before we get into the main listing. Okay, an IBD's relative strength rating, the RS rating, can also be used to identify the strongest performing stocks. It can further be used in conjunction with the RS line on the charts in IBD or MarketSmith. So I'm going to show this in a couple slides here. I'll explain that a little more. The last couple points from this chapter in Bill O'Neill's book: market corrections are a great time to identify leading stocks based on the amount that they resist the downward pull of the market. So I know I used to think when the market started to tank, I tended to step away from it and stop watching. Now it's actually the best traders actually focus more when the market is correcting, because that's when you can really, it's often when you can identify the best leadership. So when the market's correcting, you want to look for the growth stocks with the best characteristics, the best fundamentals, and the ones that are resisting the downward pull of the market the most. Because growth stocks tend to correct 1.5 to 2.5 times the general market averages. So if the S&P 500 was down 10%, for example, growth stocks are going to tend to correct 15 to 25%. So a stock that corrects 15% is generally going to outperform a stock that corrects 25% when the market starts to move higher. See, another thing you can look for is you can look for stocks that are exhibiting abnormal strength on days when the market averages are weak. So if you're holding 5 stocks and the market is down one day and all the indices are showing weakness, and maybe 4 out of 5 of your stocks are down, but one of them is up a little bit, that could be a clue that that's going to be your best performing stock, and you want to look for ways that you can funnel some more money into that particular stock. Okay, this is an IBD mini chart from the newspaper. If we're looking for the L in here, you can see here we've got the RS rating, 98. That means that Gigamon at the time this was snapped was outperforming 98% of other stocks, of all other stocks. 99 is the highest here. So anything above 80 is generally considered a good place to start. 80% plus. Although I did a study last year of the top performing stocks from 2015 and found that accelerating RS rating was a big contributor to some of the stocks that did best for the year. So if it starts at maybe you're looking at a stock and let's just say the RS is 30 and then it goes to 50 and then it goes to 70, for example, that could be a clue that that stock is going to really take off and outperform. Okay, but that's especially when you're starting, it's good to start with looking at 80 or higher on these. And that's about all you can tell here. You don't get on the mini chart, you don't get the RS line, which I'll show on the next slide. So that's about all there is to be said on the L and IBD mini charts. Okay, we can also find the L in the IBD stock checkup. So I'm going to switch over to IBD here, investors.com, and let's look at Weibo. Weibo's been a big winner the past year. So if you go to investors.com, you type in your ticker symbol up here. You get this page, you get a stock quote page, and then you can go to get a stock checkup for Weibo. So in the stock checkup, you can, right here, you get 5 categories where you can compare Weibo to the other stocks in the group. So within the internet content group, and that means that's the industry group, 1 out of 197 industry groups. They're saying right now, based on composite rating, Momo is number 1 and Weibo is number 2. Okay, so any of these 5 here you could consider good places to start looking for leadership. Stocks are showing leadership within the internet content group. You can also look by EPS rating. You can look by relative price strength rating. So Weibo's number 2 here. It's number 10 in terms of EPS, earnings per share. In terms of sales, margin, and return on equity, it's 11. And in terms of accumulation distribution rating, it's number 6. So all that feeds into why Weibo is number 2 on this list. But really, any of these, you could go in any of these and start looking, look at all 5 of these, and that's going to give you plenty of stocks to look at in that industry group. You can also identify leadership right here under the industry group rank, and it says 1 to 197. So right now, the internet content group is rated 91 out of 197. This is a combination of the performance of that industry group collectively over varying time periods. And I don't know all the details behind this. This probably would tell you right here. Yeah, you can figure that out if you want to learn more. So this is middle of the pack, which is why it gets a yellow. But that's okay. Just because the industry group rank isn't in the top 10 or top 20 doesn't mean that the group won't perform well and that the stock won't perform well. Generally, when you're starting off especially, best to look at group ranks of 1 through 40. But me personally, I don't give a ton of credence to the industry group rank. I probably should give more, but I look more at the some characteristics and then look at the stock chart action. So you can also find we talked earlier about the relative strength rating. You can find that here under price and volume. Another way to identify leadership is you generally want stocks that are trading at least 40 million in daily liquidity. So that would mean the current price times the 50-day moving average volume. So if we took just say 50 times 1.5 million, that gives us 75 million in daily liquidity. And that's good. That's above 40 million. So that's another thing to keep in mind. You basically want to see enough volume and enough liquidity in the stock that institutions are going to be drawn to buy it, and thus, as they accumulate shares, they're going to drive the price higher. So that's all I want to say from the stock checkup. I'm going to sign out here because I can't stay signed in on investors.com and MarketSmith at the same time. Okay, so if we're looking to find out about a stock's leadership by looking at MarketSmith, a couple things. We can look at the group relative strength rating here. So that's 52, meaning that this group is outperforming 52% of the other groups of the 197. So this means this is middle of the pack. So that's okay. It's not the best group, but it's not a terrible group. You can also find the relative strength rating for the stock itself is not here. You have to actually see that on the chart in MarketSmith. So let's go. I'm going to pause this and switch over to MarketSmith and show some more about how you can look at leadership in MarketSmith. Okay, let's switch over to MarketSmith here. So this is Weibo right here that we were just talking about. On the daily chart or the weekly, you can see the RS rating here, 98. So that means that Weibo is outperforming its price action is outperforming 98% of other stocks. So that's very good. That means this is one of the top performers. In fact, this was one of the top performing stocks, period, for 2016. So this is not surprising to see this. Another thing you can look at here is the relative strength line, and that's this blue line right here. So when this line is trending down, like it was here, that means that the stock is underperforming the S&P 500. When the line is going sideways, like it's basically been doing through here, that means that the stock is performing equally as well as the S&P 500. Ideally, we want to see the line going upward. That means that the stock, in this period right here, this stock outperformed the S&P 500. So this line overall, if you look at the whole chart, it is trending upwards. One thing to keep in mind is this stock formed a base here, a double bottom. When stocks do that, you'll tend to see the relative strength start to taper off while they're forming a base. So don't get too discouraged by that. But a key thing you want to see is especially when a stock breaks out of a base, which just happened on Weibo a few days ago, you want to see the RS line spike upward. And ideally, you want to see it getting close to a new high ground. So Weibo hit a new high back here, and we're off those highs now. So it would be great to see this come up and make a new high here on the chart. Okay, if you don't have Bill O'Neill's book, you can also learn about CanSlim by going to investors.com and then go to the How to Invest section here and click on the CanSlim investing system. They give you can kind of see them here, the L's right here, it's covered up partly by this window, but you could click on that L and learn a lot of the same information I just went over from Bill O'Neill's book. Okay, the next topic is I'll share my current watch list with the group. And keep in mind that it's a Friday. It's actually a Friday afternoon when I'm filming this. So I update my watch list every weekend, and this is likely to change before Monday, but this is what I have on it right at the time being. So we'll go look at that, and then we'll do a little market analysis. I'll share my current holdings, and then if we have time, talk about a couple recent trades, and then we'll wrap up. Okay, so MarketSmith. So let's look at current watch list. So I keep 5 stocks on my watch list at most. You can certainly do less than that. You can do more than that. I wouldn't recommend any more than, say, 10, because it just gets too difficult to keep track of all of them. If we start with Weibo, Weibo was a big winner last year. It formed this nice cup with handle base down here. It had a huge run up in price, nearly tripled in price. And as expected, sooner or later, the party's over and the stock starts to pull back and form another base. So Weibo formed a double bottom base here, and there was an early buy point here. There were a couple. You could use. One thing I like in double bottoms is when the second leg undercuts the first one, you can actually take I call it a super early buy point when the stock moves back above the prior low, the first low. So when this stock undercut 41.26 right here, probably, when it went back above 41.26, like on this day, you could use that as a very early buy point. The nice thing about this is you can then set your stop. If you wanted to, you could set your stop just below this, or you could set your stop to just below the second leg. So you can have a really nicely defined risk and a relatively low risk. In this case, it looks like about 4%, 4 or 5%, which is, I like that for a stop loss. So if you missed that, as this came up, you could have got in when this broke through the 50-day moving average. It was trading underneath this red line while the base was forming here. But when it came above it, anywhere in here would have been another place you could have got an early buy point. You could have also used a sloping trend line, which is shown here. Or if you wanted, you could just wait till the actual base breakout, which is right here. So the breakout day here, volume was 49% above average, which is good. You want to see at least 40%. The stock finished towards the top of the range. And right now it's flirting with a new all-time high. 56 basically is the all-time high. And it's holding, you can see it's kind of moving sideways the past few days, but it's holding above the buy point, yeah, especially on a closing basis. So this is looking really, really good for right now. I actually did buy this. I didn't own it earlier in here because I didn't have buying power. I had a full portfolio, but I had to sell Zillow this week. So I did buy this, I believe, on this day right here. So it's still within buy range. It's 2% from the pivot. So if you like Weibo, you could go for it. One nice thing is they don't report earnings until the end of the month. So we've got a few weeks here to hopefully build up a profit cushion, and that will allow us to hold this through earnings without being concerned about getting crushed if the reaction's negative. But Weibo's got fantastic earnings growth and sales growth. You can see they're somewhat declining. The earnings growth in particular is somewhat declining, but 140% was last quarter, and the estimate for this quarter is 87%. Those are still very strong numbers. And for the year, they're expecting a 66% increase. So Weibo still, in my book, is a good one. All right, move on to NetEase. I believe I've been talking about this one in recent videos as it was forming a cut base here. It did put in a handle recently, and we had a breakout day right here. Volume was not as high as you'd like to see. It was above average, which is good, and we got a little bit of a follow through here a couple days after that. I wouldn't buy this right now because earnings are due next week. So if you buy it a week before earnings, there's probably less likelihood you're going to be able to build a decent profit cushion, and you're probably going to be more likely sitting at even going into earnings, which can be very risky. So I would personally wait to see what happens on earnings through this. The stock is basically trading right at the buy point right now. This is a nice base. It was very orderly. There wasn't a whole lot of volatility in this base, and it is a late stage base. It's a fourth stage base, but stocks with really strong fundamentals can break out of later stage bases and keep on going. So that's NetEase. Planet Fitness. This is going to be in the weekend paper of IBD. That was in the IBD stock analysis this week. So you can read about this a decent amount this weekend if you want. But this is forming a flat base. It had an early buy point here if you wanted to use a sloping trend line. You can see here it broke through this trend line, and then it had a little pullback here these 3 days, and look how volume was super quiet here. And then it bounced up. It bounced off there on higher volume. So it hasn't broken out yet of this flat base, the 2207 buy point, but it's very close. And this doesn't report earnings until March 1st. So again, you got plenty of time on this one. I would say this is viable right now if you missed the early buy point here with the sloping trend line. You could also use the high right here, 2189, to get in just a little bit early. If you wanted to buy this and get in a little bit early, I'd say go ahead. You could buy it right now, and you could use the 50-day moving average as your stop. That's about a 5% stop loss. But if this breaks out above 2207 in heavy volume, then this could be a good one as well. This stock, one thing to look at is it has the earnings estimate for this next upcoming quarter that they're going to report is 217% increase. So you can see they had negative earnings growth, and then they had all of a sudden 67% positive earnings growth last quarter, which is really good, and now to go up to 200+%, that could really become a catalyst to push the stock much higher. So definitely something this is going to be a really interesting one to watch around earnings time. Grubhub was a stock I had on my watch list, and I was watching for it to break through this sloping trend line here. You can see that didn't happen, and they reported earnings this week, and the stock traded it was a little wild, and you can see it did bounce off the 50-day and find support here, but it's been down since then, and it's trading below the 50-day, and it closed below it yesterday. So this one is okay. You definitely would have liked to have seen a little more positive action after the earnings report. And you can see what they just reported, that earnings were up 21%. So that's a little lower than it's been lately. This is okay. It's not, you would have liked to have seen a better reaction after the earnings report. I'm not sure if I'll keep this on my watch list or not. And then Alibaba is the last one that I have on my watch list. Alibaba formed this really nice cup with handle here, just kind of like NetEase. Looks very similar to NetEase. And you can see that earnings growth is picking up here in recent quarters. They just reported earnings a few weeks ago, so we don't have to worry about that for a long time, not till May. Sales growth is very strong. And one thing I liked about this is that you can see that after the earnings report, it gapped up, which is good. And then it pulled back a little bit here, but look how quiet the trade has been recently. As it's been basically, it's it's forming a handle, and it's trading mostly sideways in quiet volume. That's a very good technical sign. So I would say this is viable right now to get in a little bit early. Another thing to look at here is that it gapped up and it closed above the 100 mark. And see how it's holding above the 100 mark here, basically holding above it while it's forming the handle. 100, Jesse Livermore called this a century mark, and it tends to act as major support or resistance for stocks. So the fact it's still holding above the 100 mark, I would say it's viable right now, and it's very close to the pivot point. And volume's been very quiet throughout the handle, so this looks really good to me. I really like this setup. So that's what I have on my watch list right now. As far as current holdings, and again, this is just I'm just sharing what I have. This doesn't mean to go buy these stocks. It doesn't mean they're good picks to begin with, but just to give you some ideas here. Trex, I've owned Trex for quite a while, since back in here when they had a gap up on the last earnings report. And it made a nice move up, about 15% if I remember right. And it's basically been trading sideways ever since. And this is where, this has been kind of 3 months. This thing's basically been going sideways, and it's hard. It's kind of hard to sit there and hold a stock that's just going sideways for a few months. You want to see some action. But the fact that this thing's going sideways, it's holding above. We had this prior high here at 64, and it held that throughout this base. So it's finding support on top of the prior base, which is a good sign. And it's relatively tight here. This flat base is only 11% deep. And the stocks, you can see relative strength is going sideways, so it's basically keeping up with the S&P. And we have an earnings report coming up in 2 weeks. This stock has had a gap up, a pretty strong gap up, and then follow-up move after the past 2 earnings reports. So, and you can see they had a gap up back here. This earnings report didn't necessarily have a gap up, but it kind of went sideways for this before moving up. So the past 4 earnings reports have all been pretty positive. So hopefully that keeps up here on the next earnings report. If it keeps going sideways, I've got a big enough profit cushion. I'm going to hold it through the earnings report. But if you wanted, you could buy this right now. It's buy it within the base here. But it's probably not going to do a whole lot between now and earnings. Netflix, I've owned Netflix. The first buy was back in here. As it kind of came down, was forming a handle, and it found support at the prior. There was a prior high over here that you can't see because of these boxes, but that, and then I used the sloping trend line here on the handle to complete my position. And then I made an add-on buy here on the earnings report. So I've got a full position in this, and then I made an add-on buy, and this thing just keeps on trucking higher. It's holding the 10-day moving average, this green line. It's holding it very nicely. It's been holding it for many, many weeks now. And it just keeps on going. So this one looks great. I wouldn't buy it right now. It's extended, but it's one to definitely keep an eye on. Antero Midstream Partners, I've owned this one since I believe somewhere in here, and I actually made an add-on buy this week as it was trading kind of sideways along the 10-day, and then we had this. They announced a primary offering here, which the market responded well to that. You can see volume was huge on this day, and the stock finished up, and it finished at the top of the range. So this was called a pocket pivot because the volume exceeded any down days in the prior 2 weeks, and it came out of a kind of a sideways consolidation area off the 10-day moving average. If you want to learn more about pocket pivots, you can look up a couple books by Dr. Chris Catcher and Gil Morales. They used to work with Bill O'Neill. So this one is it's extended right now. It's not buyable, but it's a good performer. Glaukos Corporation. This one I had been watching this as it was forming this base in here, and I saw the opportunity to buy early here, but I didn't have buying power. I did get buying power right in here, and I used a trend line here on this handle and bought it right here. And this thing is just, you look at all these up days in a row after the breakout. So this stock is very strong, looking very strong for right now. And you can see it's up 13% from the pivot in just a few weeks. So this is extended right now, but it's looking, it just keeps performing well. Baozun, this one I found out about from Lee Tanner, another meetup organizer. One of his members mentioned it. So it formed a first stage double bottom here, which is a, I like double bottom bases, and it had this nice sloping trend line here to get in early. So I bought this as a short-term play, a swing trade, and it's moved up nicely. I bought it this day when it broke the trend line, and it's hitting resistance around 15 right now. It can't seem to bust through that, but it's not like it bounced. It's not like it came down off of it, especially in heavy volume. We've had a number of up days in a row here, so I'm looking for this to keep going higher. And then I may just then use the 10-day moving average as my sell point whenever it closes below the 10-day moving average. But you could buy this right now and take a position in this. That would be totally fine. I keep one. I like to have one swing trade at a time, and then use position trades for the majority of my trades. And then Weibo is the last one. I mentioned this earlier. I bought this week on the breakout day here, and this is still buyable. I won't talk about this anymore since I did that earlier. Some recent trades to talk about. Let's talk about Zillow. So Zillow, I really liked this setup. This stock has had some really strong earnings growth recently. Sales growth is picking up. These are both accelerating. The estimate for this year for earnings and for next year are both very high. And this stock just formed a really nice cup with handle in here. And it was kind of like NetEase and Alibaba, kind of along that same lines. And the stock, I bought the stock. What I drew, I kind of drew this as a cup, and then this is the handle over here, kind of a longer handle. I bought it somewhere in here, as I think in here as volume was drying up, and it was trading sideways, and it was holding above the 50-day. I tried it right in there. And then I had about a 2% gain on this going into the earnings report. I normally like to have at least a 5% gain, but since I like this setup so much and I thought the numbers were so good, I decided to hold this, and I only had a half a position, so I was managing risk that way. And unfortunately, this thing had a gap down of 6% on heavy volume after the earnings report. Now, the positive thing was that it held above the 200-day moving average, and I thought about giving it another day to see if it held the 200-day, but I did end up selling this day, and I ended up buying Weibo instead. You can see the next day closed below the 200-day, And then today it's kind of close, it's looking to close right at it. So this thing could still be okay. If it holds the 200-day and starts bouncing off of it, it'd be totally fine to buy this back. But this is just one of those things. Earnings reports, you never know what the reaction is going to be. Despite them reporting near the top of the expectations, their forward guidance was apparently a little disappointing. So that was disappointing. And then Lumentum was a stock. I bought this back in here as it kind of traded in this tight little channel down in here. And then it broke through it this day on heavy volume. So I bought it here and was basically holding it using the 10-day moving average. Well, I held it and it was going to report earnings, and I was having this as a short-term play. So I sold it this day, 2 days before earnings, which was obviously not a huge disappointment, as the next day it was up 3.5%, and after the earnings report it gapped up 14%, a huge move on huge volume, and it broke out of this consolidation, and now it's holding above the consolidation. So this was, yeah, it was very frustrating that I thought Zillow had better numbers than this and had more potential. So I decided to hold Zillow through the earnings report and not hold this one because I had bought this as a swing trade. And then it just happened to work out that this was the one that was really the one I should have held through earnings, and Zillow is the one I should have sold. So things like this happen. The market's very treacherous, and you think you're doing making a good decision, but sometimes it just doesn't cooperate. One last stock I want to talk about is Nvidia. Nvidia made a huge run last year. Okay, and if you look at this green line here, this is called a channel line, an upper channel line. This stock broke the upper channel line up here and formed a climax top, at least in my opinion. Climax tops are defined in Bill O'Neill's book if you want to learn more about what that is. But basically, we got a gap up day here, we've got a gap up day here, we got a gap day, another gap day. You get all these gap days in a row. You have the breach of the upper channel line. You have the stock that was going kind of steady here, now starting to go kind of parabolic. So I actually shorted this back in here this day, which turned out to be which may turn out to be the all-time high. And I was sitting on a decent gain down in here, but then it started to move back up. And so I had to cover this for basically break even, because the earnings report was coming up, and I didn't want to be sitting on a loss going into earnings. But if you're looking to short a stock, this could be a really good one to short, because you can see it came right back up to the 120 level here, and it failed. It failed to go above that. And now the earnings report was yesterday, and you can see the stock is down a couple percent in heavy volume. So if you watch for the stock, especially if it breaches the 50-day in heavy volume, or it breaches the 100 mark, this could be a good short sale candidate. Because when stocks make a huge move like this, when the move ends and they start to come back down, they can crash very quickly. It's not a guarantee, and the market's very strong right now, so the market is working against this as a short sale, because the market is going to tend to want to pull stocks up with it, so this is going to have a hard time resisting that. But if you're looking to short something, this could be one to try. I mean, you could, if you want to try it right now, and set your stop at like 121. That might be about a 7% loss. But it's easier to make money on the long side, is what most good traders will tell you. But this is one thing I want to show too. This is very similar to what happened with Ambarella back in 2015. So Ambarella formed a climax top as well. You can see how this kind of went parabolic here. And then it had a more violent pullback here. You can see it had a 6% down day and then a gap down day on huge volume, the heaviest volume on this chart. And you can see how wide this day is. And then it did just like Nvidia. It came back up. It formed kind of like a cup here, but it failed. You can see how it failed to really move any higher than this 128 point. So that would have been, in hindsight, that would have been a great place to short this, because this stock went and cratered from here, and you could have made a lot of money on the short side. But another thing to keep in mind is that you can see the market here was coming down as the stock was coming down. So that's going to help you on the short side. But who knows? Nvidia could do the same thing here. It kind of did the same thing here. It tried to form a cup and break through the prior high. It couldn't do it. So I would watch for a breach of the 50-day and then resistance at the 50-day as a good place to short this. Another thing that's interesting is you can see that Umbrella was right around the 100 mark here. So it kind of stayed around the 100 mark, and then as it breached through it here, this turned out to be it turned out to become a resistance area. All right, last thing, let's look at the market really quickly. Let's just look at the NASDAQ. So NASDAQ is trucking into new high ground here. We've had 4 months up in a row. So everything is looking good right now. You can see it's holding the 10-week moving average very nicely right now. A volume in recent weeks has been good. We've only had a couple down weeks and volume's been low. So basically since the election right here, the market's just been looking great. One thing I want to point out on the NASDAQ is it's trading in a pretty tight channel right here. If you were to draw channel lines on this, you can see how it's trading in this pretty tight channel here. So things to watch for would be if it starts to get a little too far ahead of itself and go above this channel, that could mean that a pullback is coming soon. Might be a good time to take some profits. Another thing is if it breaks a channel on the downside, then that could be a sign that a pullback is coming, is ahead of us. So that's something to keep in mind there. And that's all I'm going to look at for the market for this month, since running out of time here. Okay, so if you found this video on YouTube and you're not a member of the Meetup group, you can join by following the below link. You do need a free Meetup account. And if you're wondering why you should join the Meetup group, files like this presentation are distributed to members only. And members are notified each month when a new video or a new presentation like this are available. And I occasionally send other information to members. So if you're not a member of the Meetup group, you'll miss out on those things. This isn't really a question from the past month, but we did a pilot webinar-based meetup this week, actually, earlier this week. And it was very successful. We had a little under 10 people participate, and we got to talk through different stocks, a lot of the ones we talked through today. And the only bad part was that using the free service, the Zoom conferencing service, we got cut off at 40 minutes, which really ended up being more like 30 minutes of actual discussion. So I'm going to reach out to folks that participated and see if folks are willing to contribute, and maybe each person, maybe we'll just alternate. Each person can pay for 1 month so that we can have unlimited time, and then our webinars could go on for an hour or 2 hours, however long we want. But yeah, unfortunately, I couldn't really find a service that would let us go for longer than that for free, especially with more than like 1 or 2 members. So future topics, we'll look at the I in CanSlim. And if you have suggestions for other future topics, please send me a message on Meetup, and I'll include the answer in a future video. All right, thank you, and see you all next month.